This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Welcome to the fourth quarter, everybody. Yes, indeed. This is Bloomberg Businessweek Daily on this first trading day of the fourth quarter, the first trading day of October. And Tim, we've got stocks higher and U.S. Treasury yields a little bit lower.
You might have remembered yesterday I asked the question in our simulcast, do we still have to come into work if the government shuts down?
Yes.
Well, I answered my own question. We are here, even though the government is shut down.
Yeah, it's not so for a lot of federal workers. Hey, listen, we're going to get into all of this also in the next 60 minutes. Speaking of the markets, what investors are watching, they are certainly thinking about what the Fed does later on this month. Investors seem to be banking on another Fed rate cut later on this month. Speaking of the Fed Governor Lisa Cook keeping her job for now. We'll get into that. We've also got the latest reads on the U.S. labor market. And so we kind of have a Fed/eco/jobs data/government shutdown roundup. That's what I'm calling it.
Okay, that works. We also got a roundup on the latest consumer tech because as we do get into the fourth quarter, all these companies are thinking about what are they putting on sale for the holiday season. Amazon's overhaul to take on Apple, Peloton's price hike, and the aura of the latest Aura ring.
A lot going on in the consumer tech space. Hey, also a lot going on in the Middle East as they try to pivot in terms of their economy and what it is for the next 100 years. So we're going to talk about that with the CEO of the Bahrain Economic Development Board, what they are doing to attract investment in. And yes, technology, AI, we're going to guess that's got a component to it.
All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check on the day's trade and top business stories. Here's Alexis Christoforous in for Charlie Pellet. Hey, Alexis.
Hey, guys, thanks. Shutdown? What shutdown? That's what Wall Street's saying right now. We have stocks higher across the board. The Dow Jones Industrial Average is up 33 points. The S&P 500 adding 19. NASDAQ Composite is rallying 89. Treasuries are a bit lower here. The yield on the 10-year at 4.11%. The 2-year yield 3.5%. Commodities have been paying attention to the government shutdown, though. Earlier, gold touched $3,900 an ounce, a new all-time high before pulling back. It is now down slightly at $38.58 an ounce. Meanwhile, key ADP jobs data showed private payrolls declined in September widely, missing estimates and increasing the odds for 2 more rate cuts from the Fed. Remember, because of the government shutdown, we may not get the government's monthly jobs report due out on Friday. In stock news, strong egg sales at Cal-Maine, not enough to impress investors. Quarterly profits missed estimates at the food company, and Cal-Maine is now doubling down on prepared foods, investing nearly $15 million in a high-speed pancake production line. Shares of Cal-Maine down 2%. And U.S. Energy Secretary Chris Wright tells Bloomberg News the U.S. government is taking a 5% stake in both Canada's Lithium Americas and its Nevada mining project. Shares of Lithium Americas, nice day for those investors, up about 25%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Back over to Carol and Tim.
All right, Alexis, thank you so much for that. Well, when it comes to kind of eco-Fed news, here's what we got for you. Payrolls at U.S. companies unexpectedly dropped in the month of September, due at least in part to issues with some data analysis. You've got Fed Governor Lisa Cook keeping her job, at least for now, following a U.S. Supreme Court order. And then, Tim, you've got the White House pulling their nomination to lead the Bureau of Labor Statistics, so throwing the leadership of the agency into further disarray.
Well, we've got our economics, our Fed, our BLS roundtable here in the studio. Michael McKee is a Bloomberg TV and radio international economics and policy correspondent. Also, Molly Smith, she's a Bloomberg News economics editor. They both join us here in the Bloomberg studio. Mike, I want to start with you and about Lisa Cook keeping her job for now. Obviously, it's people who are supportive of the structure or the independence of the Fed are cheering this, but I'm wondering from a legal perspective, it's the idea that she keeps her job for now. What does the for now mean here?
Well, it means until the court rules, which they said wouldn't be until sometime after January because they're going to hear oral arguments in the case in January. It's a rather long postponement of the decision. by the court, although anything's possible these days. One reason may be that they are taking up the case of the FTC commissioner that the president is trying to fire, whom the court allowed to be fired. But they're going to hear arguments in that case in December. And because some of these previous cases have involved the Federal Reserve, and the court has suggested there may be some slack given to the Fed that isn't given to these other agencies, it may be that they want to consider the cases more or less sort of together at the same time to think about how one affects the other. That is one reason that they may have punted on this for the time being.
So for those who are in favor of her staying on the Fed board, they shouldn't open up the champagne or anything and celebrate yet, because there's still some hurdles to go.
There's still some hurdles to go. They will have a hearing in January, and we don't know if that means that it would be something that gets delayed in terms of a decision in the same way that a normal case would be, because they're not taking the case itself. They're taking the emergency application that the administration put forward to just let her be fired. The case itself would go through the lower courts first and maybe eventually make its way back up.
Having said that, the Supreme Court could have said, yes, President Trump, okay?
Yes, and some legal analysts are suggesting that means that they do have some thought that she might be in the right, and that she might be able, the president might not be able to fire her directly.
All right. Speaking of personnel in the federal government, Molly, I want to bring you in. You and the team writing a great story about the White House pulling the nomination to lead the Bureau of Labor Statistics. What happened? Because it feels like a little bit of an unusual move by a White House that's rather deliberate in its actions and kind of doesn't take it unless it knows things are going to stick.
So we had been wondering if there was something going on with this nomination, because we knew that the Senate committee that would have heard the nomination proceedings for this candidate, whose name is Antoni, that they had already received the paperwork and were going to hold a hearing for this nomination several weeks ago. So we're wondering what the holdup is. Already had an indication that there was one Republican senator who said that she had, quote, extreme reservations about the nominee, and that her vote alone could have blocked this nomination from proceeding, because the Republicans in this particular Senate committee only have a one-seat majority. So that really could have throttled the whole thing. And we just heard from the White House press secretary, Caroline Leavitt, say in the briefing that it looked like they weren't going to have the votes to get this through. So they withdrew the nomination last night. They said they look forward to putting forth a new candidate soon. Either way, though, we still have the acting commissioner in place. So that's who had been the deputy commissioner before, Bill Wietrowski. He's been at BLS for 50 years or so. So he's a pretty experienced guy. He knows what's going on.
Sounds like it.
Is it possible he'd be the White House's pick?
I doubt it, just given that they seem to want somebody who's probably a bit more overtly aligned with the administration's views. And Wietrowski is considered to be more of a career BLS technocrat, which is not something that the White House would seem keen to want to go forward with.
Well, as we continue to watch the government shutdown, Mike, I guess we're not going to get data on Friday, right? We know that's a given.
They're going to vote one more time in the Senate on trying to get the CR passed. It doesn't look like it's going to succeed. If it did succeed, they could put the report out, because the data are all finished. It's just a matter of giving it to the commissioner, Mr. Wietrowski, and then having him transmit it to the White House ahead of time. But if we don't get that today, we will not have the jobs report on Friday. We won't have jobless claims tomorrow. Tomorrow being Yom Kippur, there's no Senate meeting, so they can't vote again.
All right, a very different jobs week in that case. Since we just brought up the shutdown, we do want to go to Washington, the House briefing room. House Minority Leader Hakeem Jeffries making some comments. Let's listen in. All right, you are listening to House Minority Leader Hakeem Jeffries there in the House briefing room as members of the Democratic Party, the leadership of the Democratic Party responding to the government shutdown. We did hear earlier from the Republican leadership, most notably J.D. Vance, Vice President of the United States, talking about the Republican view and perspective on this, something that we continue certainly to monitor. It is among our most read stories on the Bloomberg. For the latest, you can head there. We're going to be covering it over the next 3 hours.
I'm curious what Alli McCartney has to say about this. She's certainly watching this closely. She's here in our studio. She was listening to those comments by Democratic leaders. She's managing director of wealth management and private wealth advisor with Alignment Partners at UBS, managing just over $1 billion. Alli joins us here in the Bloomberg Businessweek studio. Let's start with the shutdown. You are listening to Democratic leaders right now. It doesn't seem like investors really care about this. We've seen this playbook before. We know that the government will reopen. Is that the right way to look at this?
Look, I think what you have to do in situations like this, which is hard as a journalist or an economist to do, quite frankly, is to put sort of the human impact, which is real for many people in many different ways, in context, but understand the macroeconomic and the market context. So historically, shutdowns have not really impacted markets. If there is an effect, and it usually is a negative effect, it is usually very short-lived from a market perspective. This one is a little bit interesting because of two reasons. The first is because we are so much on the Fed and the BLS data and what the unemployment or labor market looks like. And so the fact that we might not have access to the data. Now, remember, the largest conversation going through Wall Street has been, should we even be looking at that data? What is the integrity of it and what does it mean? So I think the question that people might be asking themselves, which I don't think is it is going to happen, is could the delay in data, whether it's 2 days or 2 months, change the directionality of the Fed? Which I think, to your point, when you said, Trump is now tweeting, about Powell, I don't think that was coincidental.
Why? Because it's interesting. I was thinking about, how we wanted to come at you in a good way, but meaning all the things that are coming at investors, Alli. Like, you've got this government shutdown, as you kind of said, we can probably dismiss it, but a tariff environment that is still a little bit fluid.
For sure.
An earnings season just around the corner. And then you've got a Fed that's in a tricky place. And then you have the president coming out. Why do you think the president did that?
I think that the president is trying to remind the Fed, Powell and all, especially with the other announcement today in terms of the Supreme Court's ruling that you were talking about.
Lisa Cook, yeah.
That he's in charge and he knows, and he is, and it's too late. He wants this directionality. He wants interest rates to go lower. And he talked about some not so subtle things that he's going to do in the short to medium term to get his way. Now, I think the thing that we have to be really careful of is, when we talk about history with this administration, this is a different kind of administration that does things quickly, that may not appear as anticipated or thought out. And so although we are saying historically markets are muted in terms of their reaction, historically macroeconomic consequences are very short and quick to reverse, there is the possibility, like there was in April, like there could be in anything, any day, that this could go a different direction, whether it be furloughed workers, whether it be green policy, whether it, so there is an aspect, especially as we're 38% up in the U.S. markets from the April low, that, we've had, ending last week, we have 15 straight days of just up in momentum. We are priced to perfection. There are a lot of things in the equity and fixed income market that investors may ultimately be right about, but are relatively complacent about. So this is another risk on top of sort of a salad of risks that are out there now.
Well, let's talk about the labor market risk, because we did get some data earlier today, ADP data, which we're talking about because we probably will not get the BLS data on Friday. That wasn't pretty if you... believe in this economy. 51,000 was what economists surveyed by Bloomberg expected. 32,000 is what a negative 32,000. The economy shed, private payrolls shed 32,000. That on top of potential furloughs or mass firings.
Right. That's a complication.
It is a complication. What is the economic impact of that?
So I think it all goes to the same point, which is that ultimately, when we look at the average age of a U.S. worker, in terms of this being, our average age being about at retirement, when we think about things like the tariffs that much more largely affect low-income people, we need people to have jobs, and we need people to have great paying jobs, and we need, at the same time, to be retooling the labor force because of AI and what is happening in both the manufacturing but the services industry. And to the extent that we are not doing any of those, I was recently at a dinner over last week when everybody was in town for foundations and the UN and Climate Week. And really the focus economically of that dinner was, are we investing in our labor force? Are we educating people? Because, I mean, I know I look at my kids and how they're getting through high school. I don't think they're learning anything. I don't know what college does for them. I don't know if trade school and student loans for trade school is the way to go. I don't know if I should tell my sons to be HVAC repairmen or plumbers, or I certainly shouldn't tell them to be coders. So I say all that to say, not only do we have an aging workforce, we have a completely changing human capital perspective. And most companies right now, most states and our federal government, in a sense, are on pause, waiting to see what happens.
I love that you went there. Same thing, having discussions with, a lot of companies' senior leadership that was in town last week and talking about the potential for like a 5 to 7 year labor market dislocation, which if you are coming out of college at that point or just starting your career, that's kind of a big bummer because that's a long time.
It's a really long
time to be in a market that's that fluid. I think they're figuring its way forward.
And I think there are two parts to that. There's, first of all, how do those people begin to create what we all thought was the American dream, right? Building equity, buying a home, savings. But the second part of that is, if you don't ever have entry-level employees or analysts or associates at investment banks or real estate firms or tech companies, who then becomes the next generation to create ingenuity and push economic expansion?
So you're asking a lot of existential questions.
I am.
But you also do asset allocation and manage money.
I'm bullish on the market.
So given your concerns, given what you just told us, the questions that you have about the broader economy and life here in the United States, where do you put your money?
Okay, I'm glad you asked that. So we're coming out of a month, September, where almost everything worked, right? Against history, against sort of correlation. Crazy sort of month. And then we have the narrative that we are going into the fourth quarter, which usually is also expansive.
Right.
So what am I doing now? I continue to buy gold, weak US dollar, central bank buying. There are some risks, many of which we've been talking about today. 2, long-term munis. Finally widened a little. We think that we're setting up for them to get a little bit cheaper. That's a place to look when you're a New York or California high-income taxpayer, and you can get 4% coupons that really are closer to 8% for your experience. Private investments. The private investment market, the venture capital market now, is about 60% of every dollar is going to AI. That's never been seen before. Let me give you a sort of a corollary. FinTech was about 15%, so 15 cents on every dollar. So I think there has to be a lot of diversification. I think there has to be, you have to own broadly, right? We're at a point where for the S&P 500, at least 185 stocks are outperforming the benchmark. That means we're getting some breath. There could be another couple, maybe third to go. But I think you can't get too comfortable here. This is a precarious environment. Your balance sheets right now look really good, but there are a number of issues out there, whether they be political, whether they be sociological, whether they be from the threats or the benefits of productivity and AI on the labor market. And so you really have to be like spreading all your bets.
Yeah, and it's interesting to have a VIX that's at 16. I mean, there feels like a lot of complacency in the market. Alli, thank you so much.
My pleasure.
Good to check in with you again. Alli McCartney, she's Managing Director, Wealth Management and Private Wealth Advisor with Alignment Partners over at UBS. They've got just over $1 billion in assets under management. Alli, thanks.
Well, I said we'd talk tech. Let's do that because Alphabet's Google introduced a range of new Nest branded hardware today, just a day after Amazon held its own product showcase as both companies vie to more deeply integrate AI throughout the smart home. As for Amazon, the company overhauling its devices to take on Apple in the AI era. Also, Peloton shares swinging wildly today. The company hiked prices in a sweeping product revamp. And then, Carol, there are the wearables. Aura launching a $500 ceramic smart ring with a new blood work tracking tool.
Where shall I spend my money? That's what I'm thinking. Or where will my husband spend his money? It's a lot. We knew we needed to know what's going on.
He's a gadget guy, so.
He is a gadget guy.
Listen up.
I'm like, what's this new box? What's this new device? Bloomberg News managing editor for global consumer tech. I'm assuming he has lots of boxes and devices always in his orbit. We're talking about Mark Gurman. He's out there in our Bloomberg News LA bureau. Mark, a lot here to unpack. What's the biggest news? What do you think we should first pay attention to?
So I'm just going to ignore everything you guys said. I listened well, don't worry. But I actually just got something a few minutes ago. These are the Meta Ray-Ban displays. These are Meta's first display glasses. I haven't set them up yet. They just came into the office. These are the first mainstream smart glasses with a screen and the lens. We've talked about them significantly. And then it has what's called the neural wristband. You put this around your wrist, and that allows you to track your finger movements and your motion in order to navigate the user interface of the glasses. So I'm actually really excited to diving into these a little bit later today, really using them and eventually publishing my review. They're $800. They went on sale yesterday at some Ray-Ban and LensCrafters stores, Best Buy stores. So excited to dive into these.
What's the learning curve using this, Mark? How do you have to be trained to use it? Do you have to do a demo to use it? Can you just use it out of the box? Is it going to be easy for consumers?
Yeah, they think that you need this crazy demo, and so they're not letting anyone buy it who doesn't get the demo. I got the demo at Meta's headquarters a few weeks ago, so they were pretty comfortable with me just getting one out of the box. There's probably going to be some sort of, they tell me, a video that plays on the glasses that, when you first do the first boot, tells you how to use the thing. There's a little bit of a learning curve, 15, 20 minutes or so on the learning curve as well. And so it's going to take a little bit of time to get used to it if you're new to it, to get it up and running. But I think people will eventually like this technology. My hope is eventually it moves to a hand and eye tracking like setup. So you don't need the neural wristband, something similar to how the Vision Pro is operated. But definitely, I think this is a category that's going to take off.
Unbelievable. I know when you talked about this last time, I mean, I think both of us were blown away and looking at your video that was on the Bloomberg about how to use it. Learning curves, there's these videos to kind of have, we figure out how to use things. But when I think about learning curves, Peloton, I feel like is still on a learning curve. And the stock has swung. I think it's like a 10 to 12% swing, Mark, from high to low today. They're upping prices. Explain this to us, and is this the way forward for this company?
So it's a mixed bag, right? The stock is down probably because of the changes in pricing. They hiked prices between a couple $100 and $700 on the high end, depending on which bikes or treadmills you're looking to purchase. They hiked subscriptions between a couple bucks and $5, depending on which subscription you're getting. So Wall Street doesn't like that because that's going to lead to regression, even more regression in terms of user numbers. It's going to lead to people leaving their subscriptions. It's going to lead to people maybe not wanting to buy the devices themselves because of the higher price points. And so, Wall Street usually likes a price hike, but in terms of Peloton, they really seem to despise it. On the other side of the coin, I think the hardware that they rolled out today is extraordinarily impressive. This new CEO has been in the building for a little bit less than 10 months. Actually, I think maybe 10 months to the day today. And they've got 5 or 6 new hardware devices. Under the prior CEO who was there 2.5 years or so, they did basically nothing in terms of new product launches or innovation. So I think they deserve a lot of credit for working overtime and really fast to get this new equipment out. And so we'll see what really happens with these user numbers based on these price increases, but clearly Wall Street is terrified.
Okay, let's move on to another wearable in the Oura Ring, a $500 version of its smart ring. This one's ceramic. We should remind everyone, a lot of this stuff coming out right now because this is the holiday season. This is when people do holiday shopping. We traditionally get a lot of new devices and gadgets out during this time, Mark. This new Oura Ring, I was surprised that Oura has such a high valuation now. It raised money. Bloomberg News reported on this in recent weeks. What can you tell us about this ring and what it does for the business or could do for the business?
I think it's going to do nothing for the business. This is absolutely the same ring that they launched, I think it was last October. It's the Oura Ring 4. It's just coming out in a new finish. that's $100 more expensive. So it's the ceramic finish. I have the ceramic blue one arriving at the office tomorrow. So looking forward to taking that for a spin as well to see if there is anything more meaningful about it. But this is just probably a marketing lever and maybe raise ASP slightly.
Okay.
$500 for a smart ring. Interesting price point. Let's see what happens. But Aura is a really fantastic business. But the problem is that they're $10 billion in terms of the valuation right now. So they're too expensive to get acquired, right? And they're not worth enough to be like some major hardware company, but they're getting there. They need more types of devices. They need to expand beyond rings into other types of hardware.
Yeah, I was going to say, when it comes to things like this, technology devices, consumer tech, Mark, I mean, are we that easy? You know, you just put a different finish on and we're like, yeah, I'm going to spend the money. We're not that easy, are we?
Depends.
Sometimes.
Maybe. I don't know. We'll see. I don't think people are going to buy the ceramic version. I think it's going to be super niche. I think people are more into the couple $100 version. The reason these are doing so well is because of like FSA, HSA, whatever accounts. People are using that to buy these devices. And then a lot of people, maybe not a lot of people, but some people have the Amex Platinum. Yes. And the Amex Platinum, they just did their big price increase. And as part of that, there's like a $200 annual Aura ring credit on there now. Unfortunately, and they should change this, that doesn't work with the subscription. You have to pay like $6 or $7 a month to use an Aura, or $70 a year. But the $200 a year you get from Amex, it's kind of a scam because you need to buy the new hardware, and Aura doesn't come out with new hardware every year. That's neither here nor there, but that might be driving some purchases too. Is
Aura? I mean, and you wrote the story, just a couple of weeks ago about the multi-billion-dollar valuation. Is this a hardware company or is it a software company? Software as a service?
Well, it's both. They would be fine if they didn't have this subscription, but it's really the subscription and the annual subscription in particular that I think is driving things. You know, they always say hardware is hard. Hardware is very bad margin-wise. It's not a good business. But when you're able to put a software product on top of it that has a 90% margin, you're in pretty good shape. This is why Apple shifted to services almost a decade ago now, because they knew that hardware sales were flatlining. They knew margins could potentially go down. They knew they would have to adjust prices, and the way to create recurring revenue is putting something on top that's necessary. And Aura and Whoop and some others Peloton, of course, is the poster child of this, have figured out this hardware plus software business model.
All right. Speaking of hardware, let's go to your story that's out about Amazon overhauling its devices to take on Apple in the AI era. What do we need to know, and what kind of stood out for you?
They look really cool, I think. I think Panos, he's the SVP of hardware now at Amazon and Alexa and services, has done a really nice job on redesigning the hardware of the Echoes and the Echo Shows. 3 new Kindle Scribes. These are Kindles that you can read on, but you can also write on and draw on. It's sort of like a scratch pad. I think they look terrific, and these are going to do pretty well. The new Color Scribe, $630, is the most expensive Kindle device ever. I think actually the most expensive device from Amazon since the failed Fire Phone from a decade ago. I think it's going to do really well. For me, I actually like this new mid-tier Kindle Scribe. It has a backlight. It looks like really nice, bright white paper, but obviously digital. So I might get one of those to do some reading. I need to go back to reading, and maybe I'll get one of those for the holidays.
Don't we all?
I'll send you some books, Mark. In the meantime, just very briefly, we didn't get a chance to talk about the Nest branded hardware. Again, I said it would be sort of round the world with Mark Gurman in terms of tech devices. What do we need to know about Alphabet's lineup?
It's kind of whatever. The most interesting thing to me is they announced this $100 speaker. They announced it today, but it doesn't come out until the spring, which I guess is anywhere between March and the end of May. Why they released it so early or announced it so early before the release, only, I don't know, God knows. I guess they wanted to just tell a more cohesive story and try to get out in front of some of the Apple announcements coming up in the next several months. Moving to 2K video quality, I think that's good. Ring at Amazon the other day or yesterday, they announced 4K video. So it's kind of interesting that Amazon and Google are completely 2 different spectrums of video quality in the same week.
Hey, really quickly, 20, 30 seconds. What do you think is going to be the big, hot consumer tech item this holiday shopping season?
Ooh, smart glasses. I think the Ray-Ban Meta glasses are going to do pretty well. And of course, the iPhone 17 Pro has just been blockbuster for Apple. They can't make them fast enough. So this is really big stuff for Apple this year.
All right. Well, go play with your toys, and then we'll look forward to reading your next story. Mark Gurman, always fun to check in with him. He is Bloomberg News Managing Editor for Global Consumer Tech. Highly recommend you check out his writings and reporting on the Bloomberg Terminal and at Bloomberg.com.
Hey, we are just shy of an hour and 20 minutes from the close of equity trading on this Wednesday afternoon. Let's send things on over to Alexis Christoforous in for Charlie Pellet. Hey, Alexis.
Thanks, guys. 242 on Wall Street. Stocks shrugging off the first government shutdown in 7 years. Get a load of these numbers. Down now at its best level of the day. Up about 95 points. The S&P 500 is up 28. We've got the NASDAQ now climbing 115 points. Even the Russell 2000 along for the ride, up now about 5. Treasuries are lower with the 10-year yield at 4.10%. The 2-year yield at 3.5%. Gold pulling back after a big rally earlier that saw it touch $3,900 an ounce, a fresh record high. Now, this government shutdown means we may not get the government's monthly jobs report due out on Friday, so special attention being given to the September ADP report, which showed private companies slashed 32,000 jobs last month. That's more than expected, and it may increase the odds of 2 more rate cuts from the Fed. The Supreme Court is allowing Federal Reserve Governor Lisa Cook to keep her job for now and scheduled arguments in January to weigh President Trump's bid to fire her. In stock news, Tesla hiking lease prices for all its vehicles in the U.S. after that tax credit expired. And for the first time this year, Tesla's monthly sales rose in France and Denmark. Shares of Tesla now up better than 3%. And we've got Nike shares jumping 6% after the sneaker giant posted a surprise sales increase for last quarter, but raised its tariff cost forecast to $1.5 billion. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's your Bloomberg Business Flash.
Hey, thanks so much for that update, Alexis. Do appreciate it. Alexis is giving us an update on the public markets, rather. A story getting our attention on the private side of things is something that just came out from Allison McNeely and Sri Natarajan, who write about what's happening with private equity funds as more and more of them are being established. An amazing headline: more PE funds than McDonald's signals pressure. Private market gains are pinning hopes that the next surge of growth will separate the best from the rest in an industry saturated by too many firms.
Listen, great headline. And here's the point. KKR partner Alisa Wood saying today at Bloomberg's Women, Money and Power event in London, which has been underway, says there are 19,000 private equity funds in the United States. There are 14,000 McDonald's in the U.S. How are there more private equity funds than McDonald's? That's actually crazy, right? She says capital coming back is really important. The mark-to-market paper gains only take you so far. And listen, we've talked about this. Private equity, man, it has been on a tear. There has been the last few years where, investors have been kind of waiting for their returns because companies have not been going public. There hasn't been much M&A activity. So it's just really fascinating. Those higher interest rates have really made it a struggle for buyout firms to offload their investments. So this has been very tricky for the PE market.
Enter AI, though, because private equity firms are now raising and deploying billions of dollars into AI businesses, particularly data centers, with hopes that the emerging asset class will deliver the industry a next surge of growth. They're acquiring AI companies and data center providers through their equity and real estate businesses, as well as lending against those assets. To your point, Carol, though, about numbers here, in terms of exits, because of the last few years, there haven't been many IPOs, save for the last few months. A lot of the companies that were acquired by private equity companies had been sold to other private equity companies. Yeah. So there's a lot of business happening between private equity companies, and those are the exits of late.
Yeah, moving it along, right? Kind of getting it off, the initial private equity firm's balance sheet to some extent so that they actually have new capital to deploy. And in an environment, this story, again, going back to what's going on in London today, we are talking about $7 trillion of investment needed to finance the rapid growth of AI. This is according to Hadley Pierre Marshall. She's chief financial officer at Brookfield Asset Management, her firm among a number of big private capital players seeking a central role in the technologies build-up. Listen, what is the one theme? One of the major themes that we talk about all the time and really have for the last 2.5 years. And initially, it was about NVIDIA and chips and the demand and the ongoing demand and the AI build out. And we've all kind of learned a lot over the last 2.5 years. Then it moved to the build out for data centers. Then it moved out to, okay, all the power that we need to fuel those data centers. And, you know, the frenzy, the activity, the investment, it continues. Although, and Tim and I, we've talked about this as of late, there are some questions about whether or not the revenues are going to be there for all of this investment. So there are some questions. And we've also talked about the circular financing going on, companies investing in other AI companies. And it feels like, wait, you know, is this just kind of keeping all the momentum going, or is it a real investment that leads to financial payoffs?
You didn't say bubble.
I did not say bubble.
And Kathleen McCarthy-Baldwin over at Blackstone does not think it's a bubble. She's global co-head of real estate. She said the firm doesn't see a bubble in the sector. Here's what she said. Data centers are a great place to be positioned because you're not picking which specific application within AI is going to be the winner. You win when you see the digitization of our world playing out as we are all demanding more information, more compute, more content as well.
Yeah, it's interesting. And we talked about you know, AI so much, but you mentioned McCarthy-Baldwin. She also pointed to another promising sign for the industry, the prospect of retail investors rushing into alternatives markets. And she says, you know, looser regulations making it easier for Blackstone and its peers to expand beyond their traditional investor base to find new sources of capital that fuel investments. It's kind of interesting. We have seen this again, another trend, and I'm not going to say it's just 2 years, but the private markets, not just private equity, but private credit in particular. And there has been pressure, moves, actions to make those private markets more accessible to the retail investors. And so that, in doing so, you know, can and will provide a whole other pool of capital for private credit firms and private credit investors. But, you know, there's some questions about the lack of transparency and just, you know, whether or not we need to be kind of cautious as we go because, again, because of that lack of transparency and just, you know, some concerns.
I just want to bring everyone an update on the government shutdown. It's still shut down. That's the update. But
yes.
The fact is the most read story, second most read story in the last 8 hours on the Bloomberg terminal has to do with what could happen to some federal workers this week. White House Budget Director Russell Vought is planning to swiftly dismiss federal workers. It's a sign that Republicans will lean into hardball tactics to pressure Democrats to cave to end a government shutdown. We did just hear from Democratic leaders at the top of the hour. Last hour, we heard from Vice President J.D. Vance, who spoke to reporters. I anticipate the back and forth will continue. We will always bring you the latest from Washington, D.C. when it comes to the back and forth.
In the meantime, while we keep one eye on what's going on in the nation's capital, we certainly keep one eye on Wall Street, and we've got a rally underway. So investors seem to be shrugging any concerns about maybe a prolonged shutdown. You've got the S&P 500, folks. It is up about 0.4%, 67.17, and the NASDAQ 100 a gain of about 0.5 percentage point, 126 points to the upside. Kind of an even split in the S&P, about 226 names to the upside, 275 to the downside. That's a look at the markets. Coming up, some stocks on the move when Bloomberg Businessweek Daily continues.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
Yes, indeed, everybody. We've got a rally underway on this. It's Wednesday. God, it just felt like it was later in the week.
On this government shutdown Wednesday.
It is a government shutdown. We're not laughing because it's just, I mean, it's workers, right?
Well, it absolutely
out of
is.
work, not
but
getting
look at
paid.
the way that investors are shrugging it off.
Yeah, no, investors are shrugging off. And, you know, we'll see whether or not this is a long one or a short one. So we are seeing a rally.
Jan Van Eck yesterday from Van Eck telling us, you know, we don't believe a short government shutdown is going to affect fiscal policy. Our three concerns are fiscal policy, monetary policy, and technology. Ergo, we don't really care about a short shutdown.
It's kind of interesting, right?
That's what he said.
And if you go take a look, do a history lesson, you have seen how many shutdowns that we've had over the last few decades.
Well, so 2013 is the one we think a lot about right now. 2018, a partial government shutdown.
We've had a lot more in the last few years versus, right, kind of prior to that. I'm Carol Masser, along with Tim Stenovec. Let's take a look at some of the stocks on the move today. With us is Bloomberg News equities reporter and deputy team leader for U.S. equities, Carmen Reinicke. She is in the house. We're going to start with a big chip name.
Yeah, Intel. I mean, there's been a lot of Intel news lately, and today, is no exception. This is ticker INTC. Shares spiked, and they're up about 5.5% today after a report that the company is in early stage talks to add AMD as a customer at its factories. So, as I said, this is the latest in a string of deals that have boosted Intel shares. The last few months, they have gained support from the White House, which is taking, I think, roughly 10% stake, NVIDIA, and SoftBank. And we also, Bloomberg News had a report last week that it's also in talks for backing from Apple. So all of these things have been really liked by investors. We've seen the stock really spike.
Yeah, and it's really just taken off this year, up 76% year to date. As Tim and I always say, when we go to the HDS function on the Bloomberg and we realize, oh yeah, that's right, the U.S. government is the third biggest investor in the company.
Yep.
Not the only one that the U.S. government is an investor in, of course.
Good point.
We'll talk about some of those a little later, including Lithium Americas. But I want to draw everybody's attention to Peloton, out with some new gear and some new prices today. What's going on?
Yeah, so Peloton, ticker PTON, PTON. Shares are down 6.6% today. This is the worst day since August 19th. So they're raising prices on both hardware and membership fees and doing a big sort of product overhaul. So I think the stock's probably reacting most to the increased prices. But there are also going to be new versions of the Bike Plus, Tread Plus, and a new Row Plus, as well as, some new sort of features on the hardware. This is interesting because they have a newer CEO, Peter Stern, who came from Apple and Ford, and he's really been working to turn around the company. It's had quite a few years of sort of declining sales. The stock hasn't been doing super well. In August, it had to cut about 6% of its staff and projected full year revenue would drop 2% for fiscal 2026. So, this is sort of the first step in a potential turnaround for the company. So interesting to see that investors so far are not happy with what they've come out with.
All right, Reddit, we go. RDDT.
Yeah. So
What is going on with Reddit?
It was a little bit of a head scratcher this morning. Shares are down 12%. This is the worst intraday drop since April 4th, which is kind of big if you think about what was happening in April. So huge drop for Reddit. So what it seems like is happening is that there is third-party data that's been going around on social media showing a drop in citations from OpenAI. Reddit, it's been used by sort of these large language models to help train them. Analysts,
that was a big part of, I thought, the IPO, right? And the value of the company, that all of the data and the very specific data that it could provide to AI companies and others.
Exactly. And so I think that's why the stock is reacting negatively to this. There's also been a few analysts that have written about it. So Bloomberg Intelligence's Mandeep Singh shows that this decline is, it really signals Reddit's exposure to search engine traffic. This might have been because a little bit of a switch in Google's algorithm. And how a lot of its, traffic and daily active user growth really hinges on use from these sorts of chatbots. Brad Erickson at RBC also had attributed sort of this stock weakness to this, and this is something that he's been watching for the last few weeks, showing that the citation share on ChatGPT has gone down significantly.
Yeah, that's interesting, right? In terms of kind of their
what else? I don't know
what
else.
They're up 24% year to date.
What else would they do to train these LLMs? I mean, isn't the Reddit data very valuable?
Thought so.
I don't know.
Right? And very exactly who it is. Carmen, thanks so much. That is our Stock Movers podcast. For more conversations, check out 5-minute episodes, biggest winners and losers in the market. You can find it on Apple, Spotify, or anywhere you get your podcasts. And highly recommend, too, Carmen's got a story about CoreWeave winning over Wall Street amid a flurry of new deals. This has been certainly one of the standouts of 2025. I mean, the stock on a tear since its IPO, just soaring. I think it's more than doubled, and probably, isn't it more than 200% or so?
Yeah, 240 as of yesterday.
Right? 240?
Yeah, I think that's, if my memory serves me properly.
You're pretty good with
that's
that.
That's what it is. I'm thinking about what's coming up over the next 2 hours on Bloomberg Businessweek Daily. We are going all in on the government shutdown. We've got a great group of voices throughout the next 2 hours from Washington, D.C., bringing you the latest. Also, on the rates market, that weaker than expected labor market data well, it's causing a surge when it comes to treasuries. More on a dovish Fed or potentially dovish Fed with Michael McKenzie in just a minute.
The close coming your way in just a moment. This is Bloomberg.